Good morning and welcome everyone to the Schwab YouTube coaching channel. It's the Wednesday edition of Trader Talk in today's market, and I am your host, Kevin Horner, joining you from a sunny and warm Denver, Colorado today. As usual on a Wednesday, joined by my friend, fellow Schwab coach, Brent Moores. Good morning, Brent. It's good to see you. How are things?
Hey Kevin, good here too. Sunny and warm here too, and it's just another day with excited that we've had earnings season kind of kick off here,
Yeah.
and we've got some big movers in the market, and happy to be here.
Well, we always love having Brent on a Wednesday. Thank you, Brent. And of course, happy to have all of you here. As Brent noted, we had some big earnings yesterday in the banking sector, had some significant moves in a few of those positions. And today we're also seeing a continuation of a short-term relief bounce in oil, tied to some headline news, obviously. Additionally, we're joined by Mike Fairborn there in the chat, fellow coach as well. He's going to keep an eye on comments and questions you all have. We'll keep an eye on them as well. We want to hear from you, so if you're able or interested in posting in there, please feel free to do just that. We'll try to bring your comments and questions to our discussion as well. And remember to follow the three of us on X. We're all available there for you individually. Mike Fairborn, CS, Brent Moores, CS, and Kevin Horner, CS. A follow there would be greatly appreciated. Now, we're going to move to our disclosure page, get through a few of those, and then we'll dive right into the charts. So please remember that everything we cover for you today should be considered informational and educational. We do not make any recommendations here. We do not endorse a specific approach to trading. What we offer up is our insights, concepts, and strategies traders may choose to employ in the vein of technical analysis. We do that as we review the areas of the market with you. But remember that these are just that, ideas and educational topics. Whether you choose to work with them is your decision entirely, and make sure that you're building a model or a process and plan that is fitting for the way you like to trade and your tolerance for risk. In this class, in particular, we take a top-down approach to reviewing the market with you all. So we're going to start with our indices. We'll lead with the S&P 500, work our way through the NASDAQ 100, the Russell 2000, certainly looking at semiconductors and some areas beyond that, obviously, sector action to see what's moving around there, get some leadership concepts as well. So with all of that, let's kick it off with that S&P 500. And, you know, Brent, I got to say, the thing is, we've been talking about the pause that the S&P has made, and yet, you know, it's not like we're crushing to the upside just yet, but we're also not getting any downward pressure. Our action on a day-to-day basis has been a little tighter, but we really haven't done anything to define our next appropriate levels for monitoring, because the trend really hasn't changed as we've just consolidated after a really fantastic rally. What are some of the levels that you're watching, paying attention to here as it relates to the SPX specifically?
Well, one thing I would say, Kevin, is as you mentioned, we're actually not that far off all-time highs, to be honest. I mean, there was our high, a couple months ago, I guess, but that for going sideways, maybe not a terrible thing to happen, first of all. So, but that's a key level. Can we break through that at some point? Then also before that, we kind of peaked out a couple highs right about where we're at right now, to be honest. Yeah, there, and then just about 3 days or so ago.
Yep.
Are we going to hold that? I'm not sure on that. But if we do break above that potential resistance becomes then a potential support level. And so if we go up, that's the key level. If we go down, it's still a key level because then it still solidifies that as a resistance level. Now, if we go down, hey, I see two moving averages there, your 20-day and your 50-day moving average that I think are pretty key levels, I'd say, Kevin, that if we can hold that. If we hold that, this kind of drift to the upside, just that narrative continues to happen here on this in terms of this like almost I don't know if it's going to exactly draw out to be this way, but it almost like an ascending triangle type pattern there.
Yeah, it kind of does look like that, doesn't it? With slightly higher lows in here, even though we've
Yeah.
not made higher highs as of yet. There's one low. Here's a slightly higher low, and then another one here at the 50-day with that beautiful hammer candle that I've been mentioning over the last week, right on the 50-day moving average, which kind of again solidifies that ledge as support. And you're right, we haven't broken to new highs, but it's notable that we've also not sold down, right?
Yep.
And I think that the longer we maintain these upper levels, this moving average, that being the 50-day, the more apt we are to lean into the idea that our path of least resistance is higher rather than lower. Now, obviously, there's nothing to guarantee that that holds, but the CPI yesterday came in a little bit cooler than expected, and that
Yep.
kind of helped out yesterday as well. I think the number was, I'm just looking at my details, came in on a year-over-year basis at 3.5%, and month-over-month it was actually lower by 0.4%. And when both of those were cooler numbers than were expected, and if that's going to be the case, Brent, and granted, we've seen a move in oil, which we'll certainly look at here momentarily, but the drawdown that we got in oil, the significant drop over the last couple of months here now, has led to those cooler CPI figures,
Yes.
I would think, and the market's going to take that positively.
Yeah, let me follow that up. This
Please.
morning we had a PPI number that was similarly, lighter than expected, so than the headline, and that's good, obviously for the economy, and for the inflation numbers, and that's kind of a trickle down thing because if inflation numbers are cooler, then the way investors interpret that is there's less chance or less need for jacking up interest rates throughout the year. And so inflation numbers aren't just like, oh, good for my pocketbook, good for the economy in terms of companies that are shipping stuff or whatever, but it actually has a monetary policy implication as well in terms of those. Now, one number does not, policy make, so to speak. We'll see what happens, but those numbers were a nice boost. But right now, yeah, we're kind of right up there, and you can say, well, bad news can move this down. Yeah, that's true. But we've had a fair amount of bad news, and we're like we said, we're not that far from all-time highs in the market. So it has really absorbed that news fairly well. Even with this, the resumption of the war, which may or may not have surprised people, but look, we've just kind of gone up since then.
It's a good reminder of what we say often, Brent. And we've got, as traders, we all have our own little series of idioms. I mean, my Rolodex of idioms continues to grow every single day, every single week, I would suggest. And one of them is just paying attention to what is happening, trading what we see, not what we think. And in markets like this where your narratives feel fairly heavy and negative, the reminder that I offer is to trade what we see on legitimate changes in trend, and we just don't have those yet, Brent. Anything we do that suggests bearishness at this moment is likely tied to our overall feeling about the market rather than what we see. We don't have a break of the 50-day moving average with any significance. We've been close to it here, below it here, right back above it, tested it here, rallied again into recent highs. So we've got many of these concepts that we can lean into to keep us invested. If you are looking for reasons to change that, well then a close or maybe a series of closes next, Brent, might be the scenario that would change some traders' view on the short-term SPX trend.
Yeah, absolutely. So, we'll just see. We'll watch it. We can see some strengthening on that RSI at the bottom of the page there, which is, kind of goes right in line with what we're seeing at the top of the page. So, are we going to break through the highs on that RSI? Well, that probably correspond pretty nicely with the breakthrough of the highs on the SPX, if indeed that happens.
If indeed it does. Now, JJ's asking about the pattern we're seeing here. My lines are a little bit less descriptive here, but maybe a short-term rising triangle, something like that, an ascending triangle, Brent, as you called out. But commonly we see these at areas of resistance, right? Where you've got the upper portion of the triangle needs to pop through, and that's ultimately what we're looking at. Whether you draw it with the resistance up here, or if we drew it like so, regardless, it kind of all resembles the same thing. And of course, whether we call it a name, give it a title, doesn't really matter as much as the levels we're looking at. The fact is, if we trade below the uptrend line, it looks bearish, and if we trade above prior highs, it's going to look bullish, Brent.
No doubt, Kevin. I think it's an important point you bring up. When we're talking about price patterns, really, when you break them down, they just come down to support and resistance levels.
They really do.
And so, whether you know the name or not, and most of these patterns we look at aren't perfect patterns anyway. You look at a ascending triangle or a head and shoulders, and it's not like they're totally symmetrical or all the levels hit perfectly or something like that. But I'd kind of call that ascending triangle-ish, and with resistance levels. Now, whatever the pattern is, you look for the breakout, and then you can. You may go, well, presumptively, I think it's bullish. It seems to be heading in a bullish, but a lot of traders will say, hey, I'm even willing to maybe trade on that. But typically, it's once the break is made above the breakout point, the resistance point.
And that's ultimately the reminder, Brent. If we're trading based on specific patterns here, we are in the middle of the pattern, in consolidation here, as price hasn't moved to new high or new low. And so a trader would look at this and say, all right, I'm waiting for something outside of those lines drawn in to validate the potential next move, and we just don't have it yet. As we move into the NASDAQ 100, we can see that this is very similar in scope. We've got a series of lower highs. We're in consolidation as well. It just doesn't feel quite as good, Brent, because we've been getting a lot of fits and starts over the last couple of months here in the heavy tech sector, or the tech index, I would say.
Yeah, more volatility, which is kind of par for the course for tech. And of course, you also this is true for the S&P 500 as well, I guess. But you also have this kind of a bifurcation of some parts of the sector. The sector is huge, are doing really well, and some are doing really poorly. But for convenience and just out of necessity, we kind of group them together in these big things called indexes, like the NDX. But the whole index isn't doing the same thing. But right now, kind of similar consolidation pattern, and we're kind of holding barely the 20-day here on this right now, and the 50-day, I guess. But we'll see. But the volatility is just higher on this, and look at the RSI at the bottom of the page. Yeah. Unlike what we saw on the SPX, it's come down pretty flat here. This is just showing more of a sideways, more indecision than the creep up, I would say, in that SPX.
Yeah, exactly. The SPX showed that we were, as prices had moved higher, we were moving into more of a bullish regime relative to RSI. Here, we're still holding support in the RSI, and it's coming in, Brent, at the 50 line, so you could validate this as being oversold conditions in the NDX here, because we have, even though we've gone sideways in price, our RSI has retreated to that 50 line. We know that runs us to what's considered oversold in strong bullish markets, and that's what we've really had here. So yeah, we're in consolidation as well, but again, some of these tertiary details are kind of validating the trend. And remember, the way consolidation is thought of is how did we come into this window where we've gone sideways? Well, we rallied into it, right? So we have a beautiful upward move, and then we've gone sideways. Now, the tendency, human nature, is giving you caution as you go sideways. But the reality is, the technical view suggests that the likelihood, and it might be 51% versus 49%, but the likelihood favors movement to the upside out of a consolidation because you came into it with upside. So strong move, sideways, and then maybe expectation for breakout rather than breakdown. We know it doesn't have to go that way, but that's the thought process, Brent. I think it's important that we all have those basic concepts to hang our hats on, right? I mean, it's super important because sometimes when we don't get very clear signals, we need to fall back on some of the most basic stuff: support, resistance, higher highs, higher lows.
Yep. And the markets, have a way of historically going up over longer periods of times. The longer period you look at, the more likely it has gone up. You go down, break it down to shorter periods, you break it down to a one day time frame. Basically, it's 50-50, if you will. But the longer you stretch that out, the better the odds of it going up. This is Trader Talks. We look at shorter term, not talking day trading here, but shorter term moves in the market.
Yeah.
And we draw these patterns, but you extend those patterns out and it kind of blurs out into just the general overall long-term trend of the market there. And that's hopefully, if you're bull, that's what happens.
Well, it's another reminder, Brent, that over the long haul, the market goes higher the majority of the time. And not just a small majority, a slight majority, but, over time, the market goes higher for the majority of its window. I mean, here's a 5-year look at the NASDAQ 100. Yeah, we had a window where we went down for a good period here. I mean, about, what is this? Let's see, this peak was in November of 21. We found our bottom in December of 22. So we had a 1-year pullback. We began an uptrend thereafter, but this is just the way the market goes. We're going to get 2, 3, 4 strong years. You're going to get 1 year, maybe a pullback that's lasting anywhere from 6 to 12, maybe 18 months. But on the level, over the extreme long haul, we commonly get those basic pullbacks to areas of shorter term support. It's interesting, Brent, using the NASDAQ here. It's really a little challenging to say, oh, well, we should just continue higher from here, because you see how consistently pullbacks to the 100-week moving average have been really opportunity with the NASDAQ, haven't they?
Yes, this is kind of why you should sometimes look at longer term charts as well to gain a little perspective. That little pattern you drew on, which was very big on the short-term chart, you can see that up there in the white little letter, but it puts it in perspective, and it puts where we are in perspective of, hey, it makes sense that maybe the market just hasn't continued to go up because seems to be relatively extended from this point of view as it currently is. And in my mind, the longer we can go sideways and the more that moving average, that 100-week moving average creeps up higher, maybe that's a better thing, meaning
It's true.
Less likely that we're going to have a violent drop here going forward.
Yeah, good. Some good reminders. Everybody likes to pull back a little bit. It can be helpful to do just that. Make sure you pull back the time frame a little and see a little different perspective. It can really help out. As we shift over to the small caps, the Russell, I saw some comments in here about some of you who've been, trading and learning, and we love that. Obviously, that's the whole concept of the Trader Talks channel, is to continue the learning experience. I'll just mention I'm in my 30th year in the market. The learning doesn't really stop. I hope that that's the way you're approaching this. There really isn't an end game because trading is hard. It's not get necessarily easier, but if we continue to try to challenge our own process a little bit, kind of overcome our own personal biases and things that keep us from being successful, then hopefully we're improving by bringing it to the forefront on a consistent basis. This is really what we try to do. Talk about it all the time. As Muriel's pointing out, losses as traders are part of the game. That's what we're trying to do, is mitigate or reduce the amount of losses. Frequency of loss is not a problem. It's the size of loss that commonly is a problem for you. So try and work through some of those concepts. We hope we bring those to the table for you all frequently here. Brent, as we look at small caps, the thing that stands out to me is that I can't, as much as I love that rising 20-day moving average, it really hasn't been very consistent for us. We have been beneath it a series of instances. We're beneath it right now. Maybe the 50 days a little bit more comfortable for a lot of traders out there watching the Russell here.
Yeah. So, the 20-day moving average has been going up, which is great. It's just not being used as a support level.
Yeah.
And so you can look at different moving averages and decide which one is better. And, maybe if you had a 30-day or something, maybe it would fit perfectly. Who knows? But in terms of the 50-day, it certainly held the 50-day. And so as you get closer to the 50-day, you'd kind of maybe expect that to act more as support. But having said that, we do have clearly higher lows that have occurred over the past few months, which is just showing the strength in small caps right now. And so that's kind of a bullish thing for the small cap market. Just, despite the fact that interest rates haven't always been cooperative along the way during this path. We'll see on the interest rate thing. And because, Kevin, when Kevin Warsh was originally kind of like nominated at the Fed, the theory in a way was he's going to be more accommodative to the president's desire for lower interest rates. But verbally, the message we've been hearing lately from the Fed is we're going to aggressively attack inflation. And I've heard this multiple times here. And those things kind of go not necessarily hand in hand there. So, that's just how it is. And the reason why I bring that up is because small caps tend to be more interest rate sensitive. And we don't know what the future course of it's going to be, of where interest rates and monetary policy is going to take us. But that always kind of comes into the discussion whenever we talk about small caps. But small caps have been doing quite well.
They really have. I'm wondering if the market's going to continue to digest, Fed speak, Fed commentary positively, mainly because what Mr. Warsh has stated is that we can't expect a whole lot of transparency going forward. We are, as let me see here, who nailed it? Jay is right. Jay is stating that we're going to hear from Warsh today. We are. In fact, he's about to take the podium here, top of the hour, I think. We're going to get some testimony. The markets don't always love to hear from Fed in the middle of it all. It doesn't shock us to get a little bit of volatility in those instances. But you're right. Expectation, as I was just looking at the third-party CME Fed tool, Brent, has us at a 40% potential for a hike as early as September. Now, that's come back a little bit. Over the last week, it was at 50% about a week ago. But if traders are positioning for hikes, you would think that the Russell would be pulling back deeper than it has. I mean, this is a strong trend that continues to hold. And I say the only thing that's lost of late, even though we've made moves to the upside here, has just been the momentum. And the RSI is speaking to the lack of a momentum to the upside here. Even though prices have made recent highs, we're not getting a super strong trend out of the small caps here. And, I've said it on a number of occasions. We've seen how even though the 10-year yield is rising to some levels we don't care for, if you're bullish on small caps, that is, the fact is that the Russell continues to do pretty well in spite of all of those moves.
It does.
To the upside.
Yeah, and all I can attribute that to is just economic strength.
Hmm.
And the idea that if you have a stronger economy, companies, whether you're large or small, do well. And so, yeah, I'll
Hmm.
leave it at that.
All right, Brent, let's talk about the semiconductors. In fact, we'll talk semis and we're going to look at software as well, which has been an interesting dichotomy, right? You mentioned earlier how the tech is not exclusively tech to the upside. Now, we've been in a little bit of a pullback here in the semis. We have cleanly violated the 20-day there in orange and are in process of figuring out support around the 50-day here, Brent. But I can't get away from the fact that we've made a pretty good volatile lows of late at what was prior highs. So remember, prior resistance can always become shorter term and new support. And I'm kind of wondering if that's what we're looking at right here. I think things would change. The bullish perspective would change, that is, Brent, if we traded under any of these recent lows we've made.
Yeah, that's a key. I think you identified it. I think that's the support level we'd be looking at there on the SOX. And I it's hard to predict. They tend to be very volatile,
Hmm.
and but right now they've just seen more downside. But that 50-day we're below it. I'm not sure if it's going to use that as a support level or not. We're kind of right there, but we don't really have a long history of it using it as a support level there, at least recently. I guess it used to more. But,
Right. One of the things we do frequently see from a pattern recognition standpoint, at least, is really just when we break trend, we commonly will find a support at horizontal levels as opposed to the next trend levels. So in this instance, we've been trending against the 20-day, and here we're also testing the 50. It's not a surprise to see some horizontal levels become supportive in nature. And I say that because the tendency for a trader is to say, my goodness, we're at the 50, but look at the 200. So
yeah.
if we don't hold the 50, it's not uncommon for a new technician to say, well, that means we've got to find the 200-day immediately. And I'd suggest that it's more likely that we find support in a horizontal zone rather than the next major moving average. There's a pretty significant difference, Brent, between the 50-day and the 200-day trend lines.
A big difference. And notice we are making lower lows on that RSI at the bottom of the
Mm-hmm.
page, which just suggests a little bit more weakness on the semiconductors there beyond just the fact that it's at its 50-day moving average.
Mm-hmm. Yeah, and it's exactly what you've seen from price, right? I mean, we made a high not that long ago, June 22nd, but we have seen and been under pressure of late. So, okay, Brent, let's talk about software real quickly because for a lot of traders during this window, the trade was long semiconductors, short software, and there's been some shifts a little bit in software. So I thought we could look at it real quickly if I can get the symbol correct. There we go. All right. So software, had this huge move to the downside. It rallied back into the 200-day moving average. Didn't really hold it at all, as you can see. We got above it for all of 2 days before being smacked back down. Now, Brent, this is really difficult because the volatility here is really wreaking havoc on the trader. Looks like you've got the 50-day again providing resistance now. If nothing else, it appears we know a level that we need to get through in order for software to get back in some of it mojo, and I'd say it's just pretty much these recent
Yeah.
highs. But really, we are very far out of trend, well below the 200-day moving average. We need to see that change if we're going to get any true software leadership to the upside.
And this is just the polar opposite almost of what we saw in the SOX, because at
Mm-hmm.
the left side of the chart on the SOX, it was all bullish. And lately, if you look at the far right side, it was all bearish. Here, we had that huge sell-off that you noted, but the last few weeks, we've seen actually a pretty good recovery here on this. And so that's why when we talk about tech as being, it's not homogeneous.
Right.
We're seeing some outperformance right now. Yes, there's some levels that we still need to break through, but it's I think a meaningful from our low um, from our low back in April.
Hmm.
We have a meaningful higher low from that point, and so it appears like that's a real bottom on that. Now, bottoms can always go lower at some point there, but the tenor has certainly changed on that. And when you have higher lows, higher highs, which we had, and then now we've had some volatility, no doubt, but um, that move that we had is it looks different now, and
It
so
it
we're
does.
just looking
It
for it.
does. You know what else, Brent? It was a good reminder that we can get good spikes based on news that don't hold. And it's a good point to be reminded that this is an instance where a trader would say, "Boy, we took out a level of importance, we rallied, and then we sold off." But the traders should be reminded that when we get moves through resistance that are big to the upside, commonly they get sold. And it's a reminder that, hey, if you are setting up a trade and you say, well, if this moves through this area, then I think we've got a little bit of upside. Well, then take that upside and trade it for that. Don't believe that, oh, this has gone up, therefore it only has to go up. This is the kind of thing that should lead a trader to take profits on a move significant. This was a 9% rally over 2 days. And if you went back to the low, it was more like a 14% rally over 3 days. So the point being, if you're looking at it for a trade, make sure you trade it, right?
Yeah.
Otherwise, we might find ourselves taking a winning trade and turning it into a losing trade pretty quickly.
Yeah, and the faster things go up, the faster they can fall down too, is kind of a common
Yes.
thing. And similarly, when things are dropping, and I'm not advocating trying to pick bottoms when things are dropping rapidly, but just realize by the time you get back in and recognize an upward move, usually it's moved up quite a bit at that point, because
Yep.
when things are volatile, they're volatile to both sides on that. So you have your trading rules in place when you do so, and that's so often that will mean tighter exits, I guess, if something's going up quickly, um, and more diligent, close monitoring as well.
Very true. Brent, I want to talk about oil. Oil has moved significantly, and one of the things that we try to bring to the table here, as much as the conversation around the technical aspects, are the relationship moves we will frequently get here, everyone. And that is to say, oil rallying off of area of support, and it's put pressure on certain areas of our market. So as oil has rallied over the last week and a half, something like the truckers, for example, are pulling back a little bit, as are airlines. So, just as a reminder of what we will frequently see, we get some relationship detail, right? Some understanding of, oh, okay, oil's up, then perhaps we should be seeing, or we should not be surprised to see truckers pulling back to support. That's what you've got here. We could talk the same thing, Brent, about the airline stocks. We are
Yeah.
going to be hearing from United, I think, after the bell today. And this is in pullback. Look at that, almost in perfect concert with the rise in oil. Now, that's not necessarily bearish as it finds some support in this vicinity, Brent, but just a good reminder that it's important for us traders to understand those relationship moves. They can be really insightful and instructive for our trading.
Yeah, it was funny at the top of the show you said something about a relief rally in oil, and I'm thinking,
Hmm.
relief for who? Not relief for a lot, for a lot of the country, but for the for a lot of the market, it's actually performed very well despite the oil prices going higher.
Hmm.
However, you're right. There are some sectors that are particularly sensitive, and you just pointed some of those out. And those are the ones that you're seeing the effect here on the oil. So we'll see. We have a support level kind of in place, and we'll see what happens. I mean, in the grand scheme of things, when you look at oil prices, given the status of oil shipping in the world,
Hmm.
down at we're about $80 a
Yep.
barrel. Well, look, if you just told me and hid the chart and didn't give me any context here, and I said, hey, the Strait of Hormuz is closed and whatnot, and there's this war, and like I have no idea that it's coming to an end. And I don't know when this is coming to an end. I would have guessed, if you just asked me that, I'd guess higher oil prices than what we see right now. And so, yes, the move up is understandable given news in the world, but in the grand scheme of things, it's not a super high level compared to the news that we have out there. And you can see we're actually quite a bit lower
It's
than we're
true.
at. Now, I don't know if
No,
it's going to continue up or not, but
it's notable that we're above the 20-day. Still have a pretty healthy downtrend working off of the highs. Resistance could be at 86, 85, somewhere in that vicinity. The 50-day is aggressively down sloping, probably continues to act as resistance until we're above it, and then we might be forced to change our view on oil. But reminder, everybody, we're using that futures symbol here, CL/CL.
yeah.
Not advocating for futures, of course, and you do need to be approved to trade futures here at Schwab. This is an area of the market that is not appropriate for all traders, though. So make sure if you're interested, do your due diligence, work through the process of getting approved. But just know that we're not in recommending futures trading here.
Yeah, and let me just mention something real quick,
Please.
Kevin. So sometimes when with something like oil, people go, "Well, I don't want to trade futures," and they'll go, "Well, what about ETFs?" We can't talk about ETFs in this webcast, but we do have a couple webcasts in the week that we do talk about ETFs. One of those occurs on Mondays, 4 o'clock Eastern time, and one of those occurs on Fridays at 9:30, the Trader Talk session on Fridays at 9:30 a.m. Eastern time, where we do talk about ETFs. So we will look at symbols that we could possibly trade those on. But that's a discussion for a different day where we do that. But just realize, generally we're talking about equities in this webcast.
Yeah, for the most part, that's what we stick to as best we can. Brent, as we look, okay, so we've talked about oil, and we've certainly seen some of the impact it's had on broader markets. And there was a good question in the chat, and I'm always going to take an opportunity to kind of provide some education where I can. I'm going to move us over to a sector here that's in leadership today. It happens to be discretionary for the moment, which has been under pressure, just not having a great year, oddly enough. I think if I'm not mistaken, it's one of the one group here that might not be positive on a year-to-date basis. Oh, no, it's flipped to positive on today's move. So let's see. Okay, discretionary up 1% year to date now. So we have all 11 sectors in the green. That's great. But the question was about moving averages added along my toolbar at the top. And I think a lot of you know that you can add that toolbar here down below with the My Tools, which I have defined as being on each of my individual charts. But the key component to get all that stuff added, you got to go to the gear icon, everybody. So you click on gear so that you can configure your buttons, and then you get to choose what you want to add. For a lot of you, it might not even be the moving averages. It might be something more like, oh, I want that volume profile study added in there, or maybe you want quick access to one of your draw tools. You can do that. So when you click add button, what I have done is to use study sets. So I've created individual study sets that are really customized to the way that I like to see my charts. So I've got a series of various moving averages, a 20, 50, a 200 day. And then I've got the same thing if I want to see the labels that are defining the return details. So when I click on the labels, for example, utilizing my approach here, if I can get off of my, let's see, there we go. So I'll hit save on this. So when I click on my labels, well, now I'm getting the return detail for the instrument we're looking at. So here we're looking at energy now. Notice the year-to-date change, the month-to-date change, the week-to-date change. Ultimately, just use this functionality to access the tools you frequently need and access. This will speed up your process for you, and especially if you carry your trend process from a daily chart to a weekly chart to an intra-period chart, then these become very easily accessible. By the way, there is a lot of opportunity here. You can add multiple buttons. You can even get beyond the number that I've added in, and then what you're going to get is a little arrow over here to the right and allow you to navigate through the additional features and tools you have available to you. So I just wanted to answer that. I love those types of questions. I think that the Thinkorswim platform is so robust. It's really easy to miss out on all the good things we have at our fingertips. So I like to get to those questions where we have the chance. So thanks for bringing that one up. I'm glad we got to talk about it. Brent, nice to see discretionary, but like I said, there's not a lot of trend that we can take from what's happening in discretionary here. It's kind of a messy chart. I thought that the area to maybe peek in on today might be technology, because technology has been, as we've talked, a little bit under pressure, but it's also set some important levels for us, and I'm trying to bring that up here. So Brent, again, it looks a little bit like the NDX here, but it also is showing us some understanding of true support. Do you agree?
Yeah, excuse me. Yeah, well, I think we have a clear support. You have it, you have a line, a horizontal line drawn there below where we're at right now, which is going to be the lower level of support. But more recently, we've jumped up, and 2 days ago, we bounced right off, right around where our 20 and our 50-day moving average are. And that's coincident with the diagonal line there. So are we going to maintain that breakout? That's a bullish sign right now.
Yeah.
They can change right now. They can change quickly, but right now that is a breakout and a bullish bounce, and we'll see if we continue from there.
Yeah, we would love to see continuation from here. Brent, when you see those moving averages on top of each other like that after having broken them, does this now give us another area for trend management? I mean, if you were long technology and then suddenly we're back below the confluence of the 20 and the 50, then we have a kind of risk to drift down to prior support, right? But I mean, is there anything to keep a trader from just saying, you know what, as long as we don't make any new lows below those we have seen over the last 2 months, there's no reason to really take action here to the downside, is there?
That's part of money management. Is like, if you were to say enter a trade right now, if you have a clearly defined support level and you say, hey, I'm going to get out if we're relatively close to that support level, I'm going to get out if we break below that, then we kind of have our risk set out there. Now, it doesn't guarantee it can't gap down or something like on that. But then if you can limit the downside, but you have a higher upside, that goes to your reward to risk ratio as you enter a trade. Whether you're using technical analysis or fundamental analysis, it's probably a good mindset to have is, what's my risk on the trade? What's my reward on the trade? In terms of what's my upside, what's my downside? And if your upside, if you look at something and you go, well, my upside, and you can do this for different time frames, is significantly greater than my downside, that's probably a good thing for a trader to keep in mind on that, with the understanding that, you know, your downside, even if you use a stop, isn't guaranteed. But I think it's an important mindset both for technical traders and fundamental traders.
I like that analysis, that reminder that money management is a big part of what we do. You can have complete and total familiarity with trend, and if your money management process is weak, it's going to leave you in a tough spot frequently. Brent, we got to talk about what happened with IBM. We've only got a couple of minutes, but I mean, I feel like we have to do this. Unfortunately, this has just been a horrible move on IBM this week. They got downgraded overnight to out of Oppenheimer, downgraded to perform from outperform. They did not apply a new price target on it. Difficult chart to say the least, Brent. But we learned some things about it yesterday, and clearly it wasn't just a retailers selling that led to what we got yesterday. That was a significant candle, and it looks like a lot of institutional investors might have started headed for the exits.
Yeah, it'll be interesting though to see if we hold those May lows that we had on this, because and you can see on the longer term chart, you can see that as well. Will those lows hold? And the jury's out on that, I guess. But we're up a little bit today. But that was I think I read the worst single day ever for IBM.
Yes.
Which that's saying something for that company with that history to say that. And so, we'll just have to see if we pick up support here on this.
Yeah, that's about all we can do at this point, right? The reminder once more is, with these types of trades, you get significant gap moves. This is one of those situations that we talk about, Brent, with the use of exit orders like a stop, where you're not guaranteed your price, right? This is a prime example of how we can gap below our stop level and not execute at a price near that we were hoping for, unfortunately.
Yeah, I mean, if you had a 275 stop or something on this stock a couple days
unfortunately,
ago, you'd be out probably around 220 or so, something like down there.
Yeah, it would not have gone well. It's a good reminder. Anytime we get those reminders, I bring them to the table as best I can, just for that reason, just to make sure you see it. As I like to say, in the wild. This is a prime example of why that disclosure is so important. Brent, great stuff today, man. As always, love having you on a Wednesday. Thanks for being here. Big thanks to Michael Fairborn there in the chat. And a big thanks to all of you for being here so consistently. We always love seeing the same names and faces there in chat as well. So make sure you're subscribed to the channel. Hit that thumbs up below today if the conversation helps you out at all. Be on the lookout for this making it into the archive. Should be done here in the next couple of hours. So as always, have a great rest of your Wednesday, everybody. We look forward to catching up with you again real soon.